The Finance Commission is a constitutionally mandated body set up under Article 280 of the Constitution to examine the fiscal position of the Union and state governments. It then recommends the ratio of tax sharing between the two and lays down principles detailing the distribution of taxes among states. So far, 15 finance commissions have submitted their recommendations since financial year 1951. The recommendation by the Commission on Devolution of Tax spans broadly across two dimensions: vertical and horizontal. The vertical dimension consists of the tax to be shared between the centre and the states, while the horizontal dimension comprises allotment of tax revenues to the states based on their fiscal needs due to varied reasons, such as natural resources, poverty, etc. Currently, the centre allots 41% of its divisible tax pool to the states. The 14th Finance Commission, in its 2015-16 to 2019-20 report, had raised the share of states in the divisible pool of central taxes to 42% from 32%. This was revised to 41% by the 15th Commission in its two terms of reference 2020-21 and 2021-22 to 2025-26. This is because the number of states were reduced to 28. However, the effective share in gross central taxes to the states showed a decline. And this decline has only gotten sharper since 2015. It's not just the shortfall in effective share of states that has been on a downtrend. The high cesses and surcharges on the tax revenue have also been a bone of contention. The issues of cesses and surcharges will be a challenge for the Commission as well. States in the past have accused the central government of not giving their dues of the national tax revenue share. Cesses and surcharges have seen a jump in the last few years, which many states say is wrong as the money collected stays with the centre. Data show that the share of cesses and surcharges in the centre's gross tax revenue collection has more than doubled from 2010-11 to 2020-21. So, will the vertical divide create problems for the 16th Finance Commission?
Actually, the vertical distribution between center and states, the earlier commission said 42% or so, but over time, what is happening, the cesses and surcharges, in fact, they've increased from 10% in 2010 to 20% in 2021. So as a result, what happened, effectively, the share of states has declined. So although they are saying 42%, but effectively states are getting 30% because of the increase in the cess and surcharges, which they don't have to share with the states.
It is important to note that interstate tax differences arise from various ground conditions of the states in terms of their cost of public goods. The states get the tax revenues from the centre in the form of tax devolution and grants. Individual states' share in the centre's divisible pool of taxes is determined by population, per capita income, area, as well as incentive-related factors such as forest cover and demographic change. However, the previous Finance Commission's term of recommendations came under scrutiny because it was asked to take the 2011 population figures into account in determining the expenditure requirements of the state. Southern states, which had performed well in stabilizing population growth, opposed the move and termed it a penalty for good performance. So, will the horizontal divide become a headache for the 16th Finance Commission?
There are some backward regions and there are some advanced regions. And that's the reason where they do have some kind of parameters. One of the parameters that they have is what is called distance approach. Now, if some state is backward, that means they're quite far from the average GSDP growth. So obviously, the Finance Commission will give more weightage for the distance principle because they have to address the backwardness as the first aspect of the Finance Commission. But then there are many other issues. Like, for example, for the past 3-4 commissions, they're also looking at some of the forward-looking issues like a climate change issue. So for that to address, they've been giving some incentive to the states which are spending more on forest cover. Then there are some revenue deficit grants. Those, again, that needs to be discussed in the Finance Commission so that some of the states which are having some kind of constraints in raising resources internally, like for hilly states, they cannot raise resources internally compared to other states. So those issues again will have to be dealt by the Commission.
Another issue that the 16th Finance Commission will have to deal with is the conflict arising out of revenue deficit grants. The Finance Commission gives this grant to the states which remain in current account deficit even after tax devolution. Economists worry that this incentive could prove to be counterproductive because it prevents the states from worrying about raising their revenues. They further point out that the finance commissions in the past have been unable to figure out the difference between states' financial incapacity and indifference. So, that will remain a burning issue for the new commission. Experts have pointed out that the 16th Finance Commission should expand the tax devolution towards local councils more effectively to further the reach of developmental programs.
Center can give some incentives to states to give devolution to panchayats and all. Because otherwise states think decentralization means it's up to states only. So panchayats also should get some more share in the funds. So that can give development at three levels: center, states, and panchayat. The local councils level.
The 16th Finance Commission has its task cut out to narrow the gap between tax devolution in an equitable manner. However, experts believe that the Finance Commission is an institution which is trusted by both the centre and the states. The terms of reference is generally well received by all parties, and with the technical expertise of the Commission, experts are hopeful that the issues will be dealt with.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.